John Ulzheimer is known as one of our nation's most recognized credit experts. Having worked for 28 years in the credit industry, John has become one of the most prolific speakers about credit and the go-to authority on answers to credit-related questions. Credit Countdown with John Ulzheimer.
Hey there, this is John Ulzheimer. Good day to you all. Today I'm going to answer, this video actually may be pretty quick relative to some of my other videos. Today I'm going to answer a question about credit card interest and tax deductibility. Just to get this out there in the open, I'm not a tax expert. I don't ever tell people that I'm a tax expert. I'm a credit expert. But I do get questions from time to time that kind of delve into the other areas of consumer finance, which of course will include taxes. So the question specifically is about credit card interest. So when you open a credit card account with a credit card issuer, one of the ways that the credit card issuer makes money is by charging interest. Fees and interest is generally how they make money from a consumer. The interest, which is also referred to as the APR, annual percentage rate, is applied to two things. One would be cash advances. So if you take out a cash advance against your credit card, it's really like you're taking out a loan and interest begins to accrue immediately. You don't get the grace period like you normally would get on a typical credit card statement. Two would be purchases and other charges on the account that are not paid in full by the due date of your statement. So in other words, you pay less than the full balance, which is allowed with a credit card. That's one of the features of credit cards that doesn't typically exist with other types of loans, other than things like home equity lines of credit. When you carry a balance from 1 month to the next, that's generally referred to as revolving. And so you're revolving a balance from 1 month to the next. The amount that you revolve or that you carry month to month is the amount to which interest is going to be applied. And so that's essentially going to be one of the fees that you pay for having your credit card as the interest. Now, obviously, if you pay your credit card balance in full every single month, then there is no interest, and so your APR, your interest rate, all that stuff is not relevant because it doesn't apply to you. Interest on mortgages is normally tax deductible, meaning that you can take that as a deduction on your tax returns. Interest on student loans is also generally deductible, so you can take the deduction on your tax returns. I believe that interest on home equity lines of credit is also tax deductible. But I mean, you're going to want to talk to your tax professional about that. And obviously, a few years ago, we had changes to the tax laws, and that did change some of the aspects of the tax code. So, ultimately, you're going to want to rely upon your tax professional for any of your tax-related questions. But this one, I definitely know the answer to. And the question is whether or not tax on interest that you pay on your credit card account, is that tax deductible? The answer to that question is no, it is definitely not tax deductible. I get questions from time to time asking, well, what if you buy certain things with your credit card? What if you charge your tuition on a credit card, which you absolutely could do. I do it. I pay for my son's tuition. I put it on my credit card because I want the rewards points and miles for doing so. I pay it in full, so I don't pay interest on it. But so the question is wait a minute, what if you're paying for tuition versus paying for something like, dinner? Is that a tax deductible event? And the answer, again, is no, for two reasons. A, if you pay in full, then you're not paying interest anyways. But B, it doesn't really matter what you purchase with your credit card because the interest is not deductible, even though you may be purchasing something where arguably in another environment, like a student loan, for example, which is used to pay tuition, where in that scenario, your interest would be tax deductible. So just look, be careful. Don't cheat on your taxes. Be honest on your taxes. You should always be honest on your taxes. And if you are tempted to try something silly like placing a deduction for your interest that you pay on your credit cards, you're basically cheating. And that's obviously a bad thing. You don't want to do that. So if you have any other questions about credit card and interests, drop them in the comment section below. Thanks for watching. Have a great rest of your day.
For more videos and credit tips from John Ulzheimer, go to www.tradelinesupply.com.